Good afternoon, everyone, and welcome to Stock Market Today. Ali Corman-Kintreve here with a breakdown of the action in today's session, where stocks were under selling pressure today, Ken, amid headlines out of the Middle East, and also as we await more news from the Fed from its annual symposium on Friday. But there were some bright spots today. What do you have for us?
Yeah, definitely. We'll take a look at Devon Energy, which I know was today's stock of the day at investors.com, one of the few oil and gas producers that are actually looking pretty good technically. Also take a look at a very bullish earnings report from Williams-Sonoma, and maybe a chip maker that people haven't heard of, but really like the way it's been trading after it gapped up on earnings on Semiconductor, ON.
Okay, well, we will get to that. But first, let's analyze the action in the major indexes today. So the Nasdaq taking a hit of 0.6% today, the S&P 500 as well, the Dow down about 0.5%, and the Russell 2000 hit the hardest today, down 1%. So we have the Nasdaq here now back below by just a little bit, that 15,000 mark. But with the strong gains that we've seen over the last couple of sessions, Ken, no surprise to finally get a day in the red.
Yeah, I mean, 5 straight up sessions headed into today, and Nasdaq had been hitting new highs in light volume, and there really wasn't a lot of volume behind the selling today. Volume has been light for a while, so today kind of had the feeling of distribution, maybe institutional selling. A lot of growth stocks under a lot of pressure as the risk on trade was definitely off today. But just a pullback after 5 days of gains, and not much volume behind the selling. Market can come in a little bit and still look fine technically, which the Nasdaq still does.
Right. We're still on pace for a pretty strong week. So take a look at the weekly gain right now for the Nasdaq at about 1.7% after, as we've noted, of course, coming down to the 10-week line, but finding support there. So overall, does it still feel like the market is pretty healthy at this point, or are there warning signs that we should be aware of at this
point?
Well,
I like the weekly charts, the perspective that weekly charts provide, whether it's you're looking at an individual stock. I mean, we were going through leaderboard today, myself and David, and just going to the weekly charts and say, well, we're seeing some pretty big percentage declines on a daily basis. We look at the weekly chart and it just kind of calms us down. And looking at the weekly for the Nasdaq, I mean, yeah, it's still holding support at its 10-week line. It could pull back even further and still not test the line. So I think the market looks fine. I mean, there are yellow flags. The situation in Afghanistan is still very fluid. Unfortunate to see U.S. casualties. President Biden is going to be addressing the nation at I believe 2 p.m. Pacific time, 5 p.m. Eastern. So there's some geopolitical risks out there, and I really don't think the Jackson Hole symposium where Fed Chairman Jay Powell is going to speak tomorrow at 10 a.m. Eastern time. I really don't think that's going to be a market mover. I think it's just going to be kind of a reiteration of what we heard from the Fed minutes from the late July meeting. And so I think the market's consternation right now is more what's just going on in Afghanistan, and if we're going to be able to get out there, with minimal losses.
Okay, yes. Looking at weekly charts always provides great perspective. We love looking at multiple time frames. Well, let's check in on Devon Energy, DVN. Interesting looking name in the oil and gas group, down just a little bit today, but the price move that it's made in the prior 4 sessions was pretty exceptionally strong.
Yeah, definitely. And when you look in this group, you still have a lot of stocks that are just really beaten down and far off highs, some below their 50 days and below their 200-day lines. Devon Energy is just kind of a just sticking out in the group here, as it weekly chart here, see it holding above its 10-week moving average, a breakout over a trend line. The market was pretty rough today, but we go back to the daily chart, and Devon really kept its price decline well contained here, closed off its low. So I think people looking for exposure to an oil and gas stock, Devon looks pretty interesting here.
So with it breaking above a trend line and well within 10% above the 10-week line, it seems like if we can get it to clear above the high in tomorrow's session, above today's high or yesterday's high, it seems like that might be a time to strike. Or would you want it to have a little bit of a pullback or some sort of shakeout at this point, a little bit more than just one down day?
I mean, to me, the stock looks fine right here. Actually, there's some people that may be more risk averse that'll wait and see if it is just going to move a little bit sideways here and over the next several days, and eventually break out maybe over today's high. But I think for a small, 2-3% position, you can start right here and maybe put a stop underneath, Tuesday's low or something like that. But I just think after four straight gains, with a little bit of volume on Tuesday and Wednesday, the stock looks fine right here.
Great. And Williams-Sonoma on the move today after reporting its quarterly results, but finishing well off of its highs for the day, as the overall market, of course, came in. Ken, shares still finishing up the day over 9%, heavy volume behind the move. But even though maybe the true range shows a little bit better, it closed at the bottom of its trading range for the day. So a bit disappointing to see it hitting resistance at that 194, 195 level.
Yeah, well, I mean, listen, I think Williams-Sonoma is one of the top names in retail right now. Just look at their results in recent quarters. Remember, a lot of companies were having problems executing last year for obvious reasons due to COVID. But you can see 5 quarters in a row here of pretty decent growth for Williams-Sonoma. So the company is executing very, very well. Not only did they report blowout earnings this time around, but they also announced a share buyback of just over $1 billion. They raised their dividend to 71 cents a share. So I look at this stock as one that actually still could be in the early stages of a move here. It's trying to break out of this long consolidation here, and the weak market brought it down today. There were a lot of earnings gaps that we were watching earlier in the day on IBD Live that look a lot like this. They just weren't able to hold gains despite pretty good numbers. So Williams-Sonoma is one of my favorite names in retail, and just kind of watch the stock from here. I expect you probably get a new entry. We'll just watch for some sideways trading here. I'm not sure if it's going to fill the gap from today, but the stock was up more than 9% in strong volume, and the numbers were really outstanding.
External pressures, of course, weighing on the stock today, but the retail sector is still, many of those different subgroups are in the top ranked group. So it's something that we really need to be paying attention to. And Williams-Sonoma back squarely on the radar after taking a bit of time off with this consolidation. And a stock that you wanted to put on our radar is on Semiconductor, which gained 1.2% today, had an earnings gap of its own not all too long ago. Ken, pulled back nicely, finding support near that 21-day line.
Yeah, and it traded higher today by just over 1%. And this is a company that's spread out in a lot of different industries, whether it's automotive or medical, industrial. So this is just a chip name that probably a lot of people haven't heard of. It's very liquid, trades more than 5.5 million shares a day, and the numbers look very good. Recent 2 quarters of triple-digit earnings growth and nice revenue increases accelerating over the past 3 quarters or so. So this is a stock that gapped up. You can see recently on earnings, it pulled back to its 21-day line and is now finding support there. So for people wanting a little exposure to semiconductor stocks, there's still a lot of good-looking chip stocks out there, and I think ON is one of them. We just kind of have to gauge the health of the market here, because a lot of people are expecting a pullback, even though hey, bearish sentiment is not all that extreme right now. So so having super aggressive exposure to stocks at this point probably doesn't make a whole lot of sense, but paying attention to stocks holding up well does make sense.
Yes, holding up well and focusing on proper entries and not chasing stocks and getting caught in a normal pullback. But we'll have to see what tomorrow brings. Ken, thank you so much for those great insights. And for more, tomorrow morning on IBD Live, we will be joined by special guest Joe Fahmy. Always great to have him on the show. We've featured him in the past, not only on IBD Live, but our podcast as well. Joe Fahmy of Zor Capital, bringing some fresh insights of his own and maybe a couple laughs along the way. We'll have to see. He did tell me on Twitter, set your expectations low. But no, Joe's a really funny guy, and looking forward to having him back on IBD Live, your daily morning live stream where we are sharing our screens, talking about actionable trade ideas in real time, helping you focus on strategies to help you be the best investor you can be, no matter what market conditions bring. So we'll see you there tomorrow morning, investors.com/IBD Live. Thank you again, Ken, and thank you all for tuning in. We'll see you tomorrow.